What is going on, everybody? And in this video, we're providing you a state of the market in stock picks for June 30th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market in which we are presented with each and every glorious day. No sarcasm there. This is purely just talking about this, talking facts. That's what it is. But nonetheless, let's get into the state of the market right now. This market is quite interesting. If you missed my morning, my pre-market voice, essentially voice calls that I have on Twitter, follow me at Hemi137. I talked a lot in depth today about what is going on and what I foresee. We all know that Powell's tools, the way they try to combat inflation is essentially stunting growth. And by using the tool, essentially using rate raises is going to stunt growth because it'll make it too expensive for companies to essentially go after any kind of side projects that they're trying to do, hire new help, whatever the case is. It stunts growth by raising rates. And the more they're trying to forefront this inflation by these massive rate increases, we have to understand what it's going to do and the backside of things. Right now, it sounds good. Everything sounds good. But if you start to do this too much, you're going to stunt growth. Then you're going to get de-inflation and stagflation, and it's going to be even worse. So when you start stunting growth, we can't grow. And then you go into recession, and this is the biggest concern, is that we are facing recession, that the Fed are single-handedly guiding us into recession. Even Cathie Woods has come out and talked about this, that she believes we are already in a recession. It really depends on the job numbers, and we get that next Friday before we get that pre-market. So being said, it's kind of a lot of the data is weighing very heavily on what's going on here, and understanding that the housing market is still good right now, understanding that the bank stress test is still good, but consumer confidence is low, right? A lot of people are not spending. A lot of people are holding a lot of cash because of what could potentially happen here if the Fed keeps pushing higher rates. Now, the ECB and Powell and them were on today at the ECB conference today. They're well and dandy. Everything is good. But then again, what is funny what I took from that conference today was essentially that they are essentially saying everything's okay. We're going to combat it. It's not that big of a deal. And then you had Powell a couple of weeks ago, or even today, saying, there's no way of knowing, right? This thing is getting out of control. And he even seemed panicky. Even a lot of the different conferences he had, I know that last Fed meeting, which he came on and started giving statements, he was shaking. He knew the world was waiting on every word that came out of his mouth. That's why he's very generic on the information he gives. And you have to be mindful why he has to be that way, because there is so much weight on what he says. And if he says the wrong thing, the market could potentially flash crash at this point. We're at a very critical point and understanding that this earnings cycle that we're getting ready to go into, I got one more day for Q2's over, and then we're going to get into the next earnings cycle, is really going to matter. People want to know how big of an effect inflation is having. Understand that oil is driving everything. Understand that the real reason for inflation is oil, is the control of oil and what Putin's doing. And that if we don't get a hold on oil, sure, we can tap into reserves, which we have, and then we try to buy back some of those reserves. You have to understand that this is going to be a major issue. You can only tap into some of the reserves, and then what if something major happens? Is a black swan. If we start tapping into reserves, try to drive down prices, and then something catastrophic happens and we have no reserves, then we're really in trouble because we aren't where we want to be. And the administration is pushing very hard on electric energy, that EVs and everything need to happen, but we're still heavily reliant on oil. And we have to also understand that supply is not just driven by the U.S. right? And understand that our supply chains are affected around the world, so it transfers hands multiple times, and that these other countries, even though we may be 100% EV, we're still going to get affected because all the other supplies coming from around the world that we trade with and stuff like that, we have to understand that they're going to continue to be affected because of the fact that it has to transfer hands, and they don't have EVs, they don't have trucks, electric trucks or anything like that. Everything's still run off of gas, and there are many countries that will that are many decades behind the West. You have to understand that. So being said, again, everything can look gravy here, but it's not around the world. So we're really waiting to see what the Fed is doing in the next meeting. If they come in at a 75 points or 100-point basis move, which I'm slightly leaning towards a 100-point basis move, especially if they're trying to front run any inflation. And I know there were some numbers that came out earlier today as well on some more inflation numbers. In particular, I'm trying to look and see what country that was that came out, but their inflation numbers was at 9.6. So Belgium June CPI is at 9.65 versus 8.97 in May. So you have to understand that world inflation is getting worse. Given we are coming into the summer, things will get worse. Again, forefronting, we have to see what the ECB does. Today they tried to come on a conference that act like they had everything under control. I think to an extent they may have, but if all it takes is one small slippage, and then things will really get bad. Again, it's all driven by oil. So unless oil, we've been tapping into reserves and everything like that, but unless oil is under control and we can drive down the prices, it's going to continue to skyrocket. And this is only the beginning of it. And so we have to understand that things could really come down pretty dramatically. So with all that being said, technical wise, we hit off the 200 and we bounced. Now, normally when you get a bounce off of 200, it's a nice big bounce like we had. Now we're starting to get more info. Could potentially get a nice bounce up to 38.18. If we reject there, we're going to come down pretty hard, and we're going to test that at 36.36. When we break 36.36, again, you're going to start hitting panic mode at that point, I think. And they could potentially see 3,600, 35.42. You're going to hit that 50 EMA monthly. Might get a nice bounce to retest the weekly, and then potentially sell off even more. Again, things are bad, and if you start talking about recession fears, that is going to possibly hit the panic button. And again, the moves all this year have been based off of the Fed moves, the point basis moves, and they come in at 25. I have the zones marked here. If you haven't heard me talk about that, 25-point basis move is roughly around the 42.53. Then you're talking about 50-point basis move is around the 40.65. 75 is around the 38.84. Again, when we start talking about these specific things, and it's individual. So what I'm talking about is every individual meeting. If they come in at a say we're seeing around 75 and they say 50, the market will rally quickly up to 40.41. And we see that around these times, especially when it comes closer to the meeting. If you get a lot of Fed speakers talking about a specific basis point, the market seems to be moving right there and waiting and hovers there until they get the exact answer. And if it's correct, like here, we thought we were getting a 100-point basis move in that last meeting. And then we found out, well, it's only a 75. So we actually reached up, touched 75, priced in 100, and then came back to 75 and kind of been sitting around 75. And again, now no real big news. So we're getting a lot of data, but no real big news to sell us off. If we sell us off, I think the market's trying to keep us within this 75 to 100-point basis. So I do believe we will come down here. Again, if we get bad data, that's definitely going to sell us back down. And again, what's really going to weigh in on everything is this earnings. If this earnings starts showing bad numbers, things are going to get nasty. I think that could potentially break us below this and start selling us off. I did talk about a bit of a rally. Right now, it's hard. Just stuff was looking good with the stress test. Now stuff is kind of looking, with consumer confidence coming down, is kind of looking questionable about how much of a rally we'll get. Maybe we'll revisit the 100 and then we'll rally some, and then to 75, and then we'll kind of die off, and we'll just play this range until we hit this top trend, and then when we get the Fed meeting, determine what's going on, and then again potentially again could break and sell. If we break and sell again, are going to see some really bad bloody days in my opinion. So, but Bitcoin, again, not much to say. Is running with the market. We'll have to see, and this is one of the big things too. I failed to mention about the SPX, but there was more sanctions. More sanctions placed on Russia on gold, and I think right now one of the big points I made in the morning call is that it's a big game of chicken between Russia and the U.S. and understand that Russia, they've been mining crypto for a long time, and I think that has been their sole resource to help them through this war. And I'll understand why the U.S. is rushing. Just a couple of months ago, following that process with the U.S., they really didn't care about crypto. They were dragging on their feet. Now it's a top priority for them, especially with Russia starting the war. And so understanding that that could be what's supporting their war cause. And so being said, now you get this massive rush to crypto. And so regulations are trying to be pushed as fast as possible. Right. The government normally doesn't move that fast on these things, and they didn't a couple of months ago. And then now they're really starting to press hard on it. So we have to see how this goes. But again, it's a big game of chicken between Russia and U.S. and trying to combat inflation and get a hold of oil and stop the war and kind of start alleviating some of these supply chains and drive down inflation, because that's what ultimately the root cause of everything is, the oil skyrocketing right now. So being said, crypto, again, waiting to see what happens with this. But again, I think we should be finding a floor. Again, all these levels where you're consolidating very well could start pushing up and start ripping up with Bitcoin. Crypto is not going anywhere, in my opinion. People that think it's going to go somewhere, does it go to zero? I mean, anything can go to zero, but in my honest opinion, it's here to stay. And I think I think we will hit recession, and then after recession, crypto will definitely lead a lot of things out of recession, and crypto will be even bigger and better than what it was because of the current market state and what's going on. So, and then tomorrow, again, always Tesla. Watching this, want to see if we get a retest at the 707, and then potentially be revisiting that 625. Again, this big consolidation zone. I don't know if Tesla will break below 625, but again, if it does, can revisit that 520, I think, very easily. But aside from that, we could just potentially be gathering here, wait for earnings. If earnings are bad, that could break us to 625 and send us down to 500. That could be potentially what the market is waiting for, but we have to see on that one. Google, a lot of these, more so I want people to see this. We are making a higher low here, but we can't break 2366. This could potentially retest today. If this doesn't hold, essentially the 2214 tomorrow, could gap all the way back down to the 2120. So watching Google is a big one. Amazon still struggling. Did a retest. All these are looking the same. So there's fear in the market when everything you're looking at looks the same. So watching that one as well. NVIDIA, the chips, massive sell-off. This could be a big one to watch tomorrow. Again, if we rally, if this thing breaks above the 159 mark, we could get a really nice rally up to the 169 mark. Or if it does break or open below this, we could get a massive sell. And then you got the 20 EMA is sitting around that 139 mark. So you could get a massive sell-off. I'm not saying it will sell that far down, but again, you could still, even a half of that is still a big margin to capture, especially if it's first day starting to sell off. There's still almost a 7% sell-off potentially right there. So something to watch, and something like I've always said, you need to watch and see what where we open makes a big difference, especially in this market. BA still holding essentially the 133 mark. Breaks that, again, you're going to start revisiting some lows. So just really watch that. It's consolidating hard here. Held between the 20 and the 50. Again, if it can break above the 144 mark and could potentially start rallying, again, if BA can start rallying. BA's got a lot of good news, but it is definitely hitting a hard ceiling. So if it can't break this, again, I really think we're going to start revisiting lows again. So something to watch there. JPM, again, it held the 115 mark. I don't know if this is going to help, if this breaks at all. Again, you're definitely going to be seeing the 112 mark, a strong possibility, but we have to see what we do get there. Goldman Sachs has definitely been a front runner. Same thing. Banks all looking the same. Banks may consolidate, to be honest, until we get to the earnings and really see what is going on with the banks. If they do well, then the market may open up and start running and get our rally. So we may just consolidate. We may not even get a pre-earnings run up when it comes to tech. We may just be waiting on the banks, especially with all the information that's coming out right now. Banks still have a lot of money in stress testing. But again, recession worries could drive this market down to some new yearly lows. So we got to be mindful of that. So with that being said, that's pretty much what I got. I don't want to throw too much stuff up here. I think tomorrow for me, again, I might watch the chips tomorrow. I think that chips are at a really critical level. If they do break that, again, the video, if this does break, could get some heavy selling tomorrow. So watching that, again, watching the index. I've been playing a lot of the SPX. It's easier to do it that way because normally if there's any kind of selling, there'll be some massive selling to the downside. So Airbnb could be another one potentially tomorrow. It's at a critical level. If it breaks the 92 mark, this thing could really start to sell and it could get nasty. So kind of watching Airbnb for that one as well. Again, if the market holds and starts pushing, this thing could rip potentially back up to 106. So kind of watching that move as well. Tomorrow, it's a 50-50 chance. If we land below, I think these things are going to really start to sell. Again, it's the same with SPX. If we open tomorrow flat or gap down, this thing is really going to start selling. So just be mindful of that. So again, it's a 50-50 shot. Could go up or down. This is why landing where we land matters. So if you made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.